you ready to study commerce? Yes, today we are going to study one chapter from grade 10 commerce book. The chapter is accounting equations. The primary equation which we are going to study today, it is assets equal equity. We know there are so many assets belongs to the business, and asset should belong to someone. There should be an owner. When all the assets are owned by the owner, that is become as the equity. So the asset equal equity here. For example, Raja starts a business investing rupees 600,000. It becomes as the capital 600,000 and it is the equity of the business. When the business expands, it needs more money. That means they have to find more assets. Then it will create a liability. Liability means the asset which does not belong to the business itself. So, anyhow, it makes the asset to increase. Although the asset increases, there is a part of it which does not belong to the owner. It is called as the liability. Then the equation forms as assets equal equity plus liability. That means the asset is made with the total amount of equity and liability. Liability is an asset, but it has to be paid off by the business. For example, we apply this equation and we see how these transactions affect this equation. Raja invested 700,000 and in the meanwhile he borrowed a bank loan for 250,000. So the amount of 700,000 it is the capital and the liability 250,000 it is a bank loan. So he has to pay off this liability, but although the total amount of the capital and bank loan makes the asset, that means the asset value of the business is 950,000. Okay, we will see how we are going to calculate the equity here. There are some assets and liabilities. The total amount of asset is 970,000 and the total amount of liability is 70,000. We have to find out the equity for the accounting transactions and it has to be recorded in accounting equations. So when we are calculating the equity, we have to subtract the liabilities from the assets. Here, the total amount of asset is 970,000 and the liability is 320,000. So the equity amount becomes as 650,000. Here, there's an example of some of the transactions happen in Nimal's business, which happens during the month of April. We will see how we are going to record all these transactions. The first one, owner invested rupees 400,000. So we are going to record that in the cash amount, and in the meanwhile, the equity also will increase by plus 400,000. Then the second equation, he obtains a bank loan for 300,000. That means, although it is a liability and it increased in bank loan plus 300,000, but the cash flows into the business, that is plus 300,000. And he purchased a furniture rupees 20,000. He takes the money from the business minus 20,000 and the furniture value is plus 20,000. It becomes as an asset. Then he purchased a vehicle for the business. He takes the money from the business minus 130,000 and the vehicle becomes as the asset of the business, that is 130,000 plus value. Next, he earns the amount of 50,000 for sales. In this case, we have to consider that equity will be affected in 4 situations. That is, introduction of additional capital. That means when the owner is introducing additional capital, equity will increase. Then the drawings made by the owner, that will decrease the equity. Then when the incomes flows to the business, that will increase the equity. And when we are paying off some bills, utility bills, insurance, that will make the equity a minus value, that means decrease. Here it is the income actually, so the sales earnings goes to the cash plus and it will increase the equity also. And he is paid off the bill by 10,000, that means the cash will be subtracted by minus 10,000 and the equity value also will be minus 10,000. Nimal withdrew 30,000 for his personal use. We know that when the owner is withdrawing something for his personal use, it has to be decreases from the equity also. So the cash value minus 30,000 and the equity minus 30,000. And he settled a bank loan. The cash value is minus 30,000 and the bank loan will also deduct by minus 20,000. Then for the closing balances, we take all the totals from each and every column and we have to get the total of the asset value. It should be equal to the total of the equity plus liability. So you know how to calculate these things. You have to consider when getting the final amount, the plus values should be added together, minus values should be added together, and you have to subtract and get the value. Here it is a plus value actually. So here is also a plus value. So the total amount of this all the asset is 690,000. Here also 690,000. That means our sum is perfectly done. So here it is more visible. I think it's more clear here. You can go through the recordings. Okay, so I have prepared one activity for your more knowledge. You can practice this activity by recording the transactions and how it's affect the assets, liabilities and equities. So today we learn about assets, liabilities, equity and how to calculate the equity, then how the day-to-day transaction of the business will affect the accounting equation. So I think you may have got a more clear idea about these things. And thank you for watching the video.